Welcome back. You're tuned into Barsad Morning Call and hope you're having a good Monday morning. Well, to help us out with some fundamental analysis, Prakash Diwan joins us on the show. Hi, Prakash. Good morning and good to see you. Let's talk about the big boy, ICICI Bank. It's re-rated a little bit, but those return ratios and the numbers, they appear to be justifying the kind of run that we've seen in the stock. What's your view on ICICI Bank from here on?
Good morning, Nigel. So I think definitely very good numbers, and you would need these kind of numbers to justify the move that's already been witnessed in ICICI. Of course, when you look at it from a year-on-year basis, it's just about 20% that it's done. So the question that begs us is there more room for the stock to kind of show some sort of an upside? What these numbers tell you is that the bank, in spite of all the challenges on NIMs, on quality, asset quality, all of those counts, it's doing well, which means that there could be growth if the credit expansion happens across the board. But specifically, if you ask me, there's nothing very spectacular in the numbers that warrants any kind of a re-rating in the immediate short term. But yes, it kind of paves the way for a much stronger mid-term kind of a medium-term kind of a performance, which would probably take another 2 to 4 quarters. But otherwise, today's day, I think the numbers pencil in a lot of the goodness that's already in the price.
We spoke about Maruti as well, right? When the numbers just came on Friday. Your thoughts on how to approach it? I mean, there could be some disappointment because of the margins, yes. But do you think that the street will go in and, so buy into that dip?
Good morning, Sonia. Absolutely. So as I said, any kind of a sell-off in Maruti, given the miss in numbers versus expectation. And remember, on a revenue growth like this, on a absolute margin expansion like this, EBITDA expansion like this, you would kind of have to live with some sort of a reset because of the product mix. I would believe 12.5% kind of margins are a very good base to move on as they kind of start selling more premium cars. They have been doing that, but Maruti is always known to be very conservative when it comes to pricing. So if you typically look at the differential between its base models and its top-end models, it's probably the narrowest in any other, compared to any other OEMs. And that's the reason why they are not able to pass on higher prices in terms of, incremental margin growth. And that will probably stay for a while. But I would believe the next big change in terms of the business trajectory is going to be hybrid, Sonia, and that's absolutely not yet reflected in the numbers, except for maybe 1 or 2 models which have started adding. But the Toyota collaboration is probably now reaching a stage where they will get scale as well. So I would definitely be positive on that. I mean, I've always been positive on Maruti. We've seen how it's done through the tough times. So any dip in the market would probably be a good buying opportunity for longer-term investors.
Prakash, hi. Morning. What about BSC? That fee, how the fee is going to be calculated, not based on the premium and multiplied by the quantity, but basically based on the notional turnover. Now, how they pay, the amount that they pay on is a fraction, literally a fraction of the notional turnover. But now, of course, SEBI is saying that this has to be done. NSE already, by the way, pays on the notional turnover, and I think now the BSE will have to as well. So there is some estimate saying, there's a earnings impact naturally, unless and of course the increased transaction fee, etc. Just your thoughts.
Good morning, Prashant. No, absolutely. I think this was a little bit of an aberration that there's an attempt to correct it, normalize it. And it is definitely a setback in terms of, what it ends up leaving for itself on the bottom line. There's also, apart from the impact on the EPS, which people could have different views on, my sense is that this reminds everybody of the, of the regulatory risk that you end up carrying when you buy into a company which is one of the 2 players in the market, and it's always vulnerable to any kind of changes that happen in policy and regulation. So that's the reason why the premium could shrink, more than just an EPS shrink. So it's going to be a dual impact. EPS cuts in the short term, but a PE re-rating downwards, softness in the PE multiples in the medium to long term. So that you have to live with. And I'm sure there are lots of people sitting on lots of profits. So there will definitely be an impulse to book out after this news flow.
All right, Prakash, what about AU Small Finance Bank? This announcement that came in from the RBI is good news for them. The only question is how soon can they go ahead? Because they have a pending merger that's yet to take place. And also, I think reports are indicating that this conversion from a small finance bank to a universal bank may not be very, very soon. It could be a longer term vision. The stock has been a rank underperformer. Your view on it?
Good morning, Nigel. So, yes, it's one of the most eligible bachelors in town to get into the mainstream bank club. But, the management itself has been very clearly advocating the cause for a slow turn, a slow shift into this, a slow transformation. I remember one of the interviews about 6 months back where Mr. Agarwal actually mentioned that we are going slow on this precisely because our balance sheet needs to get a bit much stronger in some of the verticals. So that might take time. But it'll be interesting because it'll become a very good case study for all the other small finance banks to kind of morph into this as and when the opportunity arises and approvals come through. But whether the stock gets re-rated because of this, I don't think so. It's an intent that's been demonstrated, that's been articulated. There's a lot of work that needs to be done to actually make it happen. And as and when it happens, whether the profitability will take time to change, that's a big question. And the answer is it could possibly be much longer than what we anticipate. So I would, and financials are giving you so much of opportunities every day. There's something or the other happening. You look at RBL Bank numbers, you look at ICICI endorsing its leadership position in most metrics. I don't think people will get too excited just because of this.
Prakash, just a quick word on tech, right? Tech Mahindra saw that very large move on Friday. HCL Tech, I'm not sure. I mean, I think it's a bit disappointing, especially the guidance, as Rima was telling us earlier as well. Just your thoughts here.
So, Prashant, my stand is very clear. The big guys will definitely struggle because it's not very easy to transition into a newer business model with, cutting edge prowess on the AI side. Whereas there's a lot of the other work that gets kind of left out in, especially the ENRD kind of space. So look at what a Persistent has done. Look what a Scient has done. Look what a Sonata could do, given its platform strength. So there are businesses which are far more nimble and they'll be opportunistically able to grow business at very decent margins as compared to the HCL Techs and the TCS of the world. So I would still believe that the allocation will predominantly go into those mid-cap or tier 2 IT names rather than the big ones. So there could be, in fact, more money moving out of these names like HCL Tech and all, given the disappointment. So you'll probably not have any kind of a PE expansion that you could expect. And then, of course, EPS expansion is still some time away. So I would look at this very differently, be more stock specific, bottom up in terms of business models in the mid-size IT rather than the large.
Prakash, this week you have a lot of interesting numbers coming out. There is CAD, there's Dabur, there is Exide, Adani Power, and some of these stocks like Exide have done exceptionally well. Any thoughts? Would you want to buy into any of these names ahead of numbers? Oops, I think you're on mute, Prakash.
Sorry. So, out of the numbers expected this week, I think very clearly Dabur is the one that I would look at whether there's any indication of a turnaround or a bottoming out, if you will, of the slowdown in rural consumption. We've seen the numbers from HUL be disappointing. We've seen Nestle being very hum and oh, but these are different product mixes, different segmented products that they have. But Dabur is probably a very good proxy to what's happening in rural India. And if that is going to be some indication, look at how undervalued these FMCGs are. They're under-owned, they're undervalued, of course, for some reason. But there could be a very different re-rating that could be starting off with the monsoon coming on time, with election spending also percolating down to the bottom of the pyramid. So there are lots of factors which could actually turn positive. Dabur numbers are the ones that I'm very keenly watching. I might not want to buy into it given the fact that it's still not out of the woods. But those numbers will definitely be very interesting to track and act upon.
Okay, all right. I think Prakash is, of course, just a quick word on, I'm looking at the note from IIFL. Let's just put a BSC. Actually, the pre-open will tell you the reaction there. There was, I think, the HDFC Securities note, which was kind of more I think, the cut that they estimated on earnings was smaller, but the IFL note, I mean, they're saying EPS could be hit by almost about 35-40%, and you'd need a similar kind of increase in transaction fee to kind of hold on to what they're making right now to maintain that level of profitability, which then kind of works in the opposite direction of trying to gain market share from NSE. So this is, I mean, looks quite damaging, at least right now. We'll try and get in touch with the management of BSE to better understand. But as Prakash earlier told us, this, of course, does bring to fore some of the regulatory risk that many have been actually talking about. Prakash,